This episode is sponsored by City Traders Imperium. CTI is a prop trading firm looking for profitable Forex traders who need more capital. CTI will back its traders up to $2 million, which is the most in the industry, and thousands of traders worldwide are trading their capital remotely from their own home. It's the most flexible funding provider in the industry, where any strategy is welcome and overnight or weekend positions are allowed. Plus, CTI doubles your account every time you hit 10% net gain, which you can scale up to $2 million. Click the link in the description to find out why City Trader offer the best funded trader program in the industry, or visit citytradersimperium.com. All right, folks, here we are on Trading Nut YouTube channel. We've got Drew here, FX Forex Bish on Instagram. Welcome to the show.
Thank you for having me, man. I'm glad to be here.
Well, look, I'm glad to have you here. I know we're going to be in for a bit of a treat here, so you're going to show us through a couple of things on a price chart in about 2 seconds. So, guys, let's jump over there, have a look, and learn a thing or two about trading the Forex market from someone who is doing it full-time over there in Tennessee. So, let's jump in your chart.
All right, everybody. So what I want to do is give you guys kind of two things that I think you guys can take away from this. So the first thing I want to do is talk about a winning trade I had today and then a losing trade I've had today as well, because in my opinion, that's the reality of trading, right? You can't win them all. So the first thing I want to talk about is a day trade I took on the dollar yen. So in my opinion, I always think that a top-down analysis is important. And the way I like to do it for my day trading is go from the 1 hour to the 15-minute and the 5-minute. And so what I saw this morning was a break below this level of structure right here. It broke below this little level of support right here looking left. So I went straight down to the 15-minute time frame. And I told myself, okay, after a break below structure, I know I want to get short, right? Because once the level of support is broken, I know that now the sellers are kind of taking control of this market. So I saw this little consolidation-based pattern right here, as you can see. Went down to the 5-minute time frame, and I was looking for potential entry to get involved. So for me, when I see something like this is what's considered market structure in my opinion. And what I mean by market structure is it's just basically a shelf, just a shelf within the price chart. We broke out of this little shelf like this, and then we started kind of moving sideways. So after we moved sideways like this set me up for a perfect opportunity to set a limit order. So basically a breakout order, a sell stop order, whatever you want to call it. So I put a sell stop order just right below it. And what's important to me is where my stop loss was. So I have my stop loss above this little shelf right here. And what I mean by that is, I always tell people this consistently. I think the number one way you can develop a consistent trading analysis and become consistently profitable is by putting your stop loss in a place where your analysis is wrong. So in my opinion, when this little shelf was formed here, if price would have came down here, filled me into the trade, and then came up here and probed above this level, I would not anticipate and move to the downside anymore. So I've got my stop loss, to me, in a place where my analysis is safe, right? So if my analysis is going to be right, then I'm going to continue in profit. If I'm wrong, I'm going to get it stopped out. So I got filled into the trade right here. I zoomed my chart out, went back to the 1 hour time frame. And like I talked about, for me, market structure, it tells me everything I need to know about what's going on. And so I looked over here after breaking below this level for the next level of market structure. And in my opinion, this is the next level of support right here. And let me make it green to kind of make it a little bit easier. And for what I mean by market structure and support is the buyers push price up, the sellers push price down, and then boom. The buyers push price up, causing pretty much the majority of this move. So what I know now is from a technical standpoint is that when we come back down to probe this level, there's going to be buyers interested in holding this level again, right? So for me, when I'm looking to take a selling position, now I know that this is the level that I first want to at least take. If I don't take full position, I want to take some money off the table, right? Because this is the area, in my opinion, where there's going to be buying pressure that tries to push the market back up. So let's go back over here now to where I was. Let me go down to that 15-minute time frame. So like I said, this was the structure shelf that we broke out of. I had a limit order or a sell stop waiting right there. I had targets coming off the low of this little area here. As you can see, this trade actually worked out well for me. I got filled immediately after the breakout, and then we went straight into hit targets. And so once again, I think the two things that I want you guys to take from this is, number one, my stop loss is in a place where if it was hit, then my analysis or my prediction would change. I would not anticipate it moves to the downside anymore anyways. And then number two, I think it's important to realize a lot of people struggle with finding areas to take off targets. And for me, being a price action-based trader, when you can understand, what happens at support, what happens at resistance, I think it gives you a bunch of clues of when to potentially get out of the market and then maybe when to switch your bias. And so in this example, it actually worked out well for me, not only on the breakout trade, but the price started to kind of reverse after it hit this area of targets. So I think this is something that hopefully you guys can take and potentially practice into your trading around market structure and understanding what type of orders and what type of orders flow into the market, kind of around these levels. So that's one trade I wanted to talk about because that's a win in my opinion, and that's a technical trade based off of nothing but price action. So of course, with every winner, there usually comes a loser, right? And so what I want to do is kind of show you guys a loss because at the end of the day, trading, at least for me, the realities of my trading, and yes, I do this for a living, is not a winner every time. It's not a winner every time. And so this pattern right here is what's known as basically a harmonic pattern. And so it doesn't really matter, what the pattern is. Basically, it's a sequence of Fibonacci numbers. And when these sequence of numbers hit, they form these little patterns that look like this. And a lot of people don't believe in them, and that's fine. I've been able to be consistently profitable on these for a while now. And so one thing I think that's important is a psychology kind of breakdown from this. And so when I first started trading these patterns, to me, I would get over leveraged because I'd see this pattern and I would think, hey, here's I guess this is a bearish back pattern. And I would say to myself, this is going to be the trade that's going to make me a winner. This is going to be the trade that allows me to buy the car, whatever it may be, flip an account. And as a technical trader, you cannot think that way. That is the number one way, in my opinion, to go broke. So the way you need to look at your trades or look at your trading, if you're a technical analyst, is look at them over a series of trades. So this one trade here does not hold any value to me as far as am I a good trader, am I a bad trader. The fact that this trade right here was a loss, it holds no value to me. That is irrelevant from the point. The point is this pattern formed. I've got rules for how to get involved, rules for where to put my stop loss, and rules for where to have targets. Because the technical edge, if you run a technical system, once again, is based off of a series of trades, not one single trade, right? So if you put too much value into one single trade, not only are you going to begin to blow accounts and start to lose money, but you're going to then start kind of destructing yourself from a psychology standpoint. So one of the things I like to think about is picture yourself owning the casino, right? There's going to be some people that come into the casino that win. And in my opinion, that's when I take a loss. But what does the casino do? The casino, no matter what, always ends up profitable over time because they have the edge, because they have the probabilities in your favor. And probabilities are not played through one trade. They're not played through one gambler, right? It's played through a week of trading, a week of gambling, a month of gambling, a month of trading. So it's really the same thing. So in my opinion, to treat your trading like a business is to treat your trading as if you own a casino. And to me, that's the number one way that I think that I can attain wealth is by owning my own casino. So this is two things I wanted you guys to take. One of them was a structure-based trade. And once again, if you can understand support and resistance, I think in my opinion, you can understand kind of when to get in the market, when to get out of the market. And then two, kind of understanding the psychology that goes in behind of what a technical system is supposed to look like. Once again, it's not based off of one trade. Your edge is exposed over a series of trades.
Nice. I love this. This is great from both sides of the spectrum, the win, the loss, the thinking behind it. I think, guys, this is excellent. Please go back and watch this video again because it is like a mini course in its own right here. Now, look, Drew, before we wrap up, what's the best way for the guys to get hold of you?
So number one way, so I went full-time this year, as we've talked about. I made a Instagram page called Forex Bish. So Forex and then B-I-S-H. My last name is Bishop, so I got the nickname Bish. So if you want to follow my journey, Forex Bish is the page. And if you do decide to follow, I just ask that you reach out so I can at least get to know you as you begin to follow the journey.
Cool. Well, look, and guys, we did shoot a full video before this. So, sorry, not video, podcast before this. So go and check it out. There's links underneath this. You're going to hear his full story and a whole bunch of other stuff. So there's so much insight in this video, but check out the other one. There's a video of it actually and a podcast. So guys, make sure you check it out, subscribe, hit the little bell, hit all, so you get all the notifications when these videos hit the airwaves in the future. All right, until next time, have a great trading week.